Hello. Hello, everybody. Hope everyone is having an amazing day so far and having a great trading week. So today's lesson might be broken down into a couple parts, maybe 2, 3, 4 part series. Um, but I want to talk about like major reversal points, reversal points in the market. Why did price get to a certain area and, turn around and what made it, like what happened in those areas, what made it turn around at that certain point, and, um, why it is such an optimal trade um, entry or idea, I guess you could say, to catch these reversal points at the peaks, right? So, what do I mean by reversal points? I mean areas like this area or this area or this area, right? This area, maybe this area down here. We could talk about this area up here, and these two areas right here, right? So we're going to have a series of lessons examining what happened in these reversal points on the monthly in in lower time frame perspectives. So I don't know, I can go, on the weekly and the daily. We'll try to go back as far as possible, but I know that on the 4 hour and the 1 hour, we can't get this previous data. It won't go back that far. So we'll try to examine as much as we possibly can. We'll break down these reversal points and have a better understanding of what happened in these areas. Okay, so let's get started. Um, let's just start with the most recent area of reversal down here on the monthly. So first off, we see down here on the monthly time frame that, obviously there was these equal lows right here, and liquidity, price got slammed down at an aggressive pace, capturing these equal lows right here. Maybe this is a double bottom on lower time frame perspective, um, but we can't really get the details of what happened on the monthly time frame. Okay, so we're going to go down to the weekly and see what happened in this area first. All right. Okay, so we're in this area. Now, one thing that we see on higher time frame perspective is a simple market structure pattern. This pattern right here, after this liquidity got captured, we see a simple market structure pattern that is also popular to buy on, right? So we see that that is happening. So if you understand smart money, you will know that once you see price start aggressively going in a different way, there might be a shift in the market, right? So what do we look for in smart money terms? We look for the last down candle before an up move, okay? So we see this weekly area right here, right? This weekly candle, this last down candle before this up move, okay? So we put a line right there, right? Now, you know, what why would we choose this one over this one? Well, first off, this candle was the first one to engulf this weekly candle. Yes, this one engulfed as well, but this one was first. And some people might say, well, this candle got accounted for right here. Maybe, maybe so, but there's also this imbalance right in here. Okay, right? So now that we have an understanding of where the last down candle is on a higher time frame, we're going to go now to the daily and see what happened. And now this is what I'm talking about all the way back here. I won't be able to go back this far on the 4-hour time frames, but I think we can get a good understanding of what's going on with price in this area on the daily as well. Okay, so we take a look down here. We see that this candle, we see this aggressive move up, and look at what happened. So there were equal highs right here. I think I'm going to delete this for now, if I can get a hold of it. Okay, so now I can see better. So in this area, this is that aggressive move right here that drove price past these equal lows right here. This whole aggressive move, right? This is big money players accumulating leftover orders right here, right? So we see that they made their last run of a liquidity capture, right? So now we examine what's going on in this area right here in particular. What's going on? We've created a set of equal highs here and a set of equal highs here. Now, there's imbalance in between right here and this candle. You see this wick right here? This wick to this wick, there's an imbalance. So market has to come back and fill this imbalance. It doesn't always have to, but a higher percentage of the time, it really does. So this blue line represents our weekly point of interest that we were looking at, our weekly point of interest. How do we refine that after the fact that this has came up? Well, if we go back to the weekly and we go to this area again and just mark off the candle right here that engulfed that last down candle before this engulfing, we go back to the daily and we'll see where it started, right? Now remember, we're examining reversal points. So we're just seeing what we can find in in these areas to not only one, help our precision in the market, but two, um, give us a better understanding how how we can take longer term trades, or trades with more pips as well. So here's that start of the weekly candle, right? The start of this weekly candle. There's the Friday close down here, and then we have an open. So this is the start of that weekly candle. Now here's the close, right? Here's the close of the week. Okay, here's the close of the week. So you have Sunday, Monday, Tuesday, Wednesday, Thursday, Friday. Now look, you have Sunday, Monday, Tuesday, Wednesday. You have Thursday night. You have Thursday Thursday night, or probably London session or New York on a Thursday, okay, in this area right here. We came up, this was the engulfing of this candle. So if you look on the daily, see how there's a flat level plane right here? These would be considered equal highs, right? And these get engulfed. So now, technically, if we look right here, this is the last down candle, okay, before this aggressive move up. So as this weekly candle is getting formed, there's this last down candle that got accounted for, and then we have an engulfing. So this would be the last down candle for this engulfing. It comes back around, and we enter right in this blue area, okay? So we could ride this up for close to 460 pips. It comes back down and gives you, you know, like I said, there's imbalance right in here. So it came back down to fill this imbalance. Now, like I said, it doesn't always have to happen. The imbalances, don't always have to happen. What they are good for, though, is a potential direction of where the market could go. That's it. So they don't always have to happen, but when imbalances do fill, they're very powerful. So, so in this area now, right, we get this sideways range. Okay, we get this sideways range right here. Now look what happens. The market shoots up in this area, right? So we came back, mitigated this order. We have the weekly point of interest, and we can have this daily 50% point of interest right here. Okay? This daily 50% area of the candle. Okay? Now, if you are, very precise and aggressive trader, you could have taken an entry right here. Stop loss would have been, below this low, this minor swing low right here, and you would have been in profit. But you would have been waiting through this whole range of, maybe a couple weeks, through this whole range right here. And then we finally see this breakout. What happens on this breakout? Let's look really close. What happens on this breakout? You see this last down candle right here? You see this engulfing? This last down candle before this engulfing up move. It comes back down and mitigates out of this sell position, right? This sell position. So we could have had an entry right here, right? And rode this up. As you can see, a lot of pips were collected, a lot of pips, close to 2,000 pips in this first major swing, in this first, major swing, right? So that is the first area of reversal that you can catch, and it goes all the way up. And now, we can talk about, minor reversal areas, but I'm going to talk about major reversal areas on this particular lesson right here. And maybe another lesson we can talk about, minor reversal areas like this or this or this or even this, right? But I would have to break it down on, the 4 hour, 1 hour, and maybe even potentially lower. So for now, let's just stick to the higher time frame major reversals for now. So what happened in this area right here? when we get through this whole swing right here, what happened in this area? Okay, I can delete this now. So what happened in this area? Maybe there was, a minor distribution phase where, you have this up thrust right here, and then actually, let me go back to the monthly really quick. So we talked about this area down here. Next, we're going to talk about this area right here. So weekly time frame, right? Weekly time frame, we have a distribution schematic, right? We have a distribution schematic going on, and you have right here, you have your up thrust, and after that, you have your U tab, your up thrust after distribution right here. Okay, so a lot of people I know that they don't go deep into detail with Wyckoff. They just do some lazy stuff like this, and I don't really know what that is. It's not really teaching. You're not really learning anything from it. Um, so yeah, yeah. I don't know if I don't know if they don't know the labels, or, but we have a distribution type of schematic here. Now, what do I see right here? First off, if you watched a previous recording, I talked a lot. I talked about breaker blocks, right? I talked about breaker blocks. So if you see right here, let's just say we have liquidity, right? So did liquidity get hit? Did these stop losses and buy stops get hit? Yes, they did. So we have, not that, so we have this breaker, a bearish breaker block to be exact, right? Right here, this one. So when price aggressively moves down, why doesn't it come back up to the last up candle, right? Why doesn't it come back up? To be honest, I can't tell you why, other than, slippage in price and just fast repricing in the market, right? So sometimes this will happen when the market will slip and only retrace back to a certain point of liquidity that was broken. So if you remember what I was talking about on breaker blocks, uh, you know you can ask yourself, when you see something like this, you can ask yourself, um, was was there a high or low taken out, or a stop hunt? So you can see these equal highs, and this was taken out. So yes, there was. So check one. Did it break the previous high or low after taking the stops? Did it break this low right here? Yes. Yes, it did. You can see clearly right in here, it broke these lows. Okay? So, if you remember, I said in a bearish range, right? In a bearish range, in a bearish range, or a down closed candle in the most recent swing low, prior to an old high being violated, right? So old high got violated, came down, the a closed down candle. So I see that there's this one, this big candle right here. It's almost like that banks leave their footprints behind, right? So if I just moved this over, right, and I'm sure you guys can already see it already, there's a nice entry point right here. There's a nice entry point right here. Now, no doubt you would have had to hold this for 1, 2, 3, and then on the fourth week, we would have got more slippage, right? We would have got more slippage. But what happens? What happens when this structure also over here gets broken? Look, y'all see that? Y'all see that? More entry points, right? So in this scenario, I like this because we're getting different kinds of lessons all wrapped in one in this series that we're doing on these reversal points, because not the markets, you can find setups that do the exact same thing, but that doesn't mean that they're always gonna move or you know do it the exact same way. Okay, if you understand that, then your ability to find setups will become easier. You'll feel more relaxed when taking trades because you have seen this type of stuff over and over and over again. Okay, so that's the weekly bias. Now let's go down to the daily and see what it looks like. Okay, so right here we're in this area. Now what do we see? First off, first thing you can see is this engulfing down candle right here. So, and then slippage. So what is that trying to tell us? What are the big money players, the institutions, the hedge funds, the banks, the people with a lot of money that can move price like this? What are they trying to tell us? That maybe they might want a shift in the market to the downside, right? They might want to shift the market into the downside. Okay, so if I take that last up candle before the down move right here, you see this last up candle and then it engulfs right here. If I placed a line going across right there, you can see clearly we have a nice entry point right here, right? We have a nice entry point right here, okay? And that would allow us to catch around a good 550 pips. 550 pip trade. That's an amazing trade. But in the process of this, what was happening? What was happening in this sideways, this sideways range, this distribution schematic? What was happening? There were equal highs right here being created. And as you know, smart money tells us, equal highs and equal lows, aka, you know, double tops, double bottoms. They aren't a trade setup. They're targets. They're targets in the market, right? So when we see these being created, we know not, we're gonna watch the retail crowd sell off or buy on equal highs and equal lows. We're not. we want to change our paradigm and shift the way we think about the market. Okay, so yes, we got a good entry right here, and it came back. And before it came back, we should have realized already that there were equal highs here. So what happened, right? We have this up thrust. We have equal highs right here and captured liquidity to the upside right here, right? We captured liquidity to the upside. Now, when we see this, we're getting to a point in the market where you can start to see on larger time frames that market structure is being printed out. Your basic patterns are being printed out as as time moves on. In this distribution, you can see this. I think I've dropped uh distribution and accumulation patterns schematics in my personal chat. Um, if I didn't, I'm probably gonna drop them again. I think I did, but they're very useful to study, and you'll start to, when you look at the patterns, you'll start to understand that your 1 hour double tops and double bottoms and head and shoulders and triple bottoms and inverted head and shoulders on lower time frame perspectives, they just don't play out most of the time as much as people would like them to. But when things like this happen on higher time frame perspectives, they usually tend to play out really well. So in this scenario, first thing I see is right here we finally have an engulfing candle to the downside, right? We finally have an engulfing candle to the downside. So what can I do? I can put a line going across right here, right? I can put a line going across right here. Now, say you missed this and price came down, right? So where would be your next point of interest? Would be this order block right here, right? You can do 50% or the opening of the candle. But if you know order blocks, you know that they are very high probable setups, very high probable trades, and they have a high win ratio, right? So in the midst of this, this weekly breaker all happening, we can catch entries up here before this long drop even happens. Okay, so what do we see? We just keep going. It happens over and over again. These order blocks happen over and over and over again, right? So look, last up candle before a down move, order block. Last up candle before a down move, order block. Last up candle. You could have did this one, but last up candle before a down move could have got an entry here, right? Now, when we think about the weekly area that we were on, we remember that we saw this kind of slippage twice in the market right here, right? There was slippage twice in the market right here. So, like I said, was there a high or low taken out, or basically, as everyone knows, is called a stop hunt? Yes, yes, there was. Did it break the previous high or low after taking the stops, after hitting the stops and activating the buy stops? Yes, it did. Where was this at, right? So it was either this gray area that I have. And if you look at where this breaker block got formed, if you take a real close look, you can see right here in this area, there's actually a order block around in this area. Okay? So throughout this whole thing, we respected this daily order block right here in this area. You have had many chances. 1, 2, 3, 4, 5, 6, 7, 7 days. You could have had a whole week. So you had a lot of chances to enter this trade. You had 7 days to enter this trade after this breaker had been formed, had been valid, right? So that breaks down that scenario pretty well. And now let's move on to the next reversal point on the monthly time frame. Right? So we have this area down here. We have this area down here, right? So first thing I see, for after this or before this reversal happened, first thing I do see is equal lows. Equal lows right here. We just talked about it. Equal lows isn't an opportunity to buy. It's not a trade opportunity. Equal lows means there's a lot of money sitting under this area. We want to capture this liquidity. We want to take liquidity. We want to basically take other people's money, right? In a sense, you could say, right? It's like the example, like, haven't you ever been in a trade and you get stopped out of the trade, but then the trade kind of it comes up and then goes the way that you wanted it to go. It's an ugly drawing, but you've been in a trade and then it comes up and then comes back down, right? And you sold right here. You sold in this area, right? This is the manipulation that banks do. That's what banks do. They manipulate price for a reason. That's how they make their money. This is a business for them as well. So that's how they make their money. So right here, first thing I see after this liquidity grab right here is this doji in particular. We see this area. Now I can delete this. It's monthly perspective doji, right? Monthly perspective doji. We see this area. Okay? I know you guys see that candle sticking out like a sore thumb right here. Okay? So now let's break it down. Let's go down to the weekly time frame and see how we can examine this, how we can, dissect more entries on this reversal before the reversal even happens. Okay? What can we do? All right. Ooh, this one looks juicy. I like this one. I like this one a lot. So we get major structure liquidity grab, right? We get a major structure liquidity grab. We see slippage in price right here, and then this last liquidity grab right here. You guys see this candle right here in particular? Look at what this candle did. This candle right here, look. Equal lows. There's equal lows. So let's just say on a lower time frame perspective, this is a double bottom, right? Let's just say on a lower time frame perspective, this right here is a double bottom. And you have the retail mindset of buying a double bottom. Look at what happens. Look at what happens when you buy double bottoms, right? They get wrecked a lot of the time. A lot of the time they do. So after this liquidity grab, look at what we see in the market, right? Yes, there's equal lows here as well. So in taking this, we need to be very careful. But we see the banks trying to tell us something in price, right? There's an imbalance fill with this up candle. So what do we do with smart money? The last down candle before an up move. Last down candle and then engulfs, right? So look, from that monthly perspective area that we were in right here, we move this to here. Now look at where our nice entry point would have been. Okay? Now we're on the weekly, guys. We're on the weekly time frame right here. This is weekly, right? These are weekly wick entries, right? So say we had a open and then a 50%, right? So we had a 50% entry, weekly 50%, okay? Right here. Now, my favorite, I like the 50% more than anything, just because, you know, if you take a wick entry, you have more of a chance of having more drawdown in your trades versus, you know, taking a 50% entry. Um, you know, that's why I like 50% because I don't like drawdown on my trades. I just don't. And you know, I don't really know who does, to be honest. Because in this game, you know, you have to control your emotions, and a lot of people, you know, can't control their emotions for very long when they're seeing their MT4 constantly red, right? Right? They see their MT4, you know, in negative numbers, you know, that can mess with a person's head. It really can. It can mess with a person's head. So in this monthly reversal, we have a nice 50% weekly entry. Okay. Now, as price keeps going and going up, we can start to see a shift in the market right here. Okay. So we have equal highs here as well. These equal lows got captured. Equal lows got ran through. And then we broke above these equal highs, right? We broke above these equal highs. That's giving us a sense in, you know, repricing, market structure shift, right? Always higher time frame. Um, you know, we made a low and we made a higher high, right? So, you know, remember that's basic stuff, higher highs and higher lows. So you look at this, higher high, higher low, and then we get stuck in this range. But what most people don't see is these aggressive down moves. So say liquidity is right here, and then we have this order block right here, right? And then we have this 50% area. So price trades down into this area, giving us another wick entry, right? Right here. And then what happens again? It happens again. This last down candle, and then we take off. We fly, right? We fly. So from this entry down here, say you missed it. You're watching price. Now what did I say? Equal highs or equal lows are not an opportunity to trade. They are targets. They are targets for banks. There's a lot of liquidity above those areas, above equal highs and equal lows. There's a lot of liquidity, and liquidity is money. Banks love money. Okay? So we should have already, after this new high got made and this higher low got made, we should already have a bullish bias. We keep making higher lows right here. Higher low, higher low, higher low, higher low, and we fly, right? So if you just caught this entry right here, which was very precise, that's 1,960 or 50 pip trade right there. That is a beautiful, beautiful setup, right? So let's go down into the daily. And also, guys, remember I said this is gonna be, you know, a couple parts to this series. So um, I think we got about 5 more minutes or so, and we can break down this daily area right here, and um, we will continue the lessons on the next recording. But just to recap, right here we had equal lows, right? And this is the beauty of this, because we have a um, a sort of breaker and mitigation block scenario right here, right? So if we zoom in, what are the what's the criteria for mitigation blocks and breaker blocks? What's the criteria? So mitigation blocks don't have a stop hunt, right? But breakers do. So right here, was a high or low taken out, you know, also known as a stop hunt? Yes, there was. Right here. Right in this area right here was taken out by price right here. Okay? But then we also get this area right here where we make these equal lows on the daily. We shoot up. So here is this mitigation. Now, it's the same rule, right? It's the same rule. Um it's the same rule in a bullish scenario. Is a bullish range or up candle in the most recent swing high prior to an old low being violated. So look, if we look at this, if we examine this very closely, we get these equal lows right here. I'll make this box green so we can actually see it. These equal lows right here, they got ran through, right? They got ran through, equal highs got made, and then an engulfing candle. Okay, so this engulfing candle right here, look at where this candle goes. Okay, so remember, this was our, I'll change these colors to yellow so we can signify them as the weekly, but then this blue one is the daily. Now look at this entry that we would have got right here. You guys see this entry? Zero drawdown trade. Zero. None. No drawdown on this trade right here. You would have entered right here. Right? Beautiful trade setup. Now, say you missed that. Now what is the criteria for a breaker in a bullish scenario? Is a bullish range or an up candle in the most recent swing high prior to an old low being violated. So look, this up candle right here. You see this up candle? this up candle in the most recent swing high. You can say this is a very minor swing high, right? So if we took this and drug it all the way across, look at where price goes. Look at where price goes, right into this range. So you have many confirmations right here of why to take this buy, of why you should take this buy, okay? Engulfing on the daily, engulfing on the weekly, swing high that uh, a low that got broken, that got violated, an up candle in the um, recent swing high prior to these lows getting broken, multiple confirmations of why you should take this trade, right? Multiple confirmations. Moving on over here. So these blue lines are weekly, right? They're weekly candles. So look at this doji right here that gets engulfed. We'll do yellow on this one. So look at this right here. Last down candle before this up move. Price comes back down. Once again, we have these equal highs right here. This whole gray box is equal highs, right? Triple top. I know you guys see this triple top right here. Now, with a retail mindset, what does the retail crowd expect this triple top to do, right? They expect it to fall, right? They expect it to fall off the face of the earth and just keep going. But it doesn't do that. It goes here and straight up, right? And we fly. Okay? So I think I'm going to end this one right here, and we'll come back later and we will talk about the rest of these reversal points on the next lesson. And hope you guys got some value out of this one. It's been fun, and let's all keep learning and have a great day.